Happy Friday, everyone. Welcome back to Swan Signal Live here with the crew. We've got John here. You know him, you love him. Got a couple of new faces here as well from the Swan Private Wealth team. We've got Matt and Isaiah for their first time on the show. Welcome to Swan Signal Live, fellas.
Good to be here.
What's up, guys? Happy to be here.
Absolutely. We've got tons to talk about today. Wow, what another week. So much going on in Bitcoin and the broader macro markets. And we've got a bunch to dump into. So, John, I'm going to kick it over to you. There's been lots of talk this week about the day, I think it was maybe Tuesday, Wednesday, where markets were falling and Bitcoin was staying steady, roughly. So we've got Bitcoin was up just a little bit on the day while gold was down 2.5%. The S&P was down almost 5%. The DJI was down 4%. NASDAQ down 4.75 in comparison. So we very rarely see days like this. Here's a tweet from David Lawant. He said, BTC is actually holding up remarkably well, all things considered. Remember how it reacted during broader market panics just a couple years ago? Sign of the times. So, John, what do you make of this price action?
Yeah, what a week. Definitely a historic week for markets. I was out for a family event, kind of out of pocket all day yesterday. I feel like I've missed a ton, a huge day, then another huge day today. So I'm catching up a little bit. I do want to shout out the chat. We got a lot of big galaxy brains in the chat. We got a few comments here. I'm not dumping you. We're just decoupling. I love that one. SF Hodl, well done. Someone else called out, look at GME, and I had not seen this. I had not seen GME's price today. GME, GameStop, for those unfamiliar with the ticker, is up 9% on a day when the markets are tanking for, I think you get to call a 4 to 5% one-day drop in the S&P 500 is a tank by anyone's definition. So yeah, markets are tanking. Bitcoin is up. That's what Brady just showed. We have some other graphics that we want to show. We don't want to read too much into a one-day trend, or maybe we do, but no, we want to have
we
more.
Want to, but we shouldn't.
we want to, but we know we have to be a little more balanced than that. So, and this is more than a one-day trend. And we have another graphic that we want to put up because we wanted to look back to November of last year, just before the election. But you could really pick, it doesn't have to be November 1st. This chart would look roughly the same if you picked October 1st, September, December, would look roughly the same. We have IBIT here as the proxy for Bitcoin because that is obviously one of the Bitcoin ETFs. Everything else here is an ETF of some sort. And just going down the list in order of best performance since November 1st of last year, Bitcoin at about 22%, gold is next at around 10%. Government is the ticker, GOVT, that's a government bond index, that's up 4%. LQD is an investment grade corporate bond index that is up, call it 2.5%. HYG is a high yield corporate bond index. That's high yield is also referred to as junk bonds sometimes. That's basically flat. PDBC is a commodities ETF, broad basket of commodities. That's down a couple percent. And then the big ones here that many, many people in the country have exposure to, SPY, QQQ, and MAGs. That's S&P 500, NASDAQ, and the MAG 7. Those are down about 10%, 11%, 12%, call it, respectively. So that's been the performance since November 1st. Anyone listening to this, you probably have heard a Bitcoiner somewhere say something about how Bitcoin should be treated differently than all these other asset classes, given what it is, given the nature of it, given its properties. We've been banging that drum for how many years now? Just last week on this show, if you guys tuned in, we did a little round the horn of me, Brady, Steven, and Ben Workman on why we think Bitcoin does trade with a high degree of correlation to traditional assets like stocks. I won't rehash all that now. I just bring that up to say it's kind of funny timing because we were just talking about that last week. And now just a handful of days later, this again, it's one day trend today. That's very big, but we did show you the numbers since November. There does appear to be some form of decoupling here. And we're going to get into the tariffs. Maybe as people look at the tariff announcement and say, hey, all these other asset classes are really affected by tariffs and all this uncertainty, maybe Bitcoin will look like this more certain, neutral monetary asset that people are going to jump into instead of all those other more volatile, uncertain asset classes. So that's what I got for the open there. But curious, any thoughts and comments you guys have?
Let's take a look at this chart too, John. This is a 3-day. The x-axis isn't, the labels are gone, but this is just about the past 3 days or 3-day price action. You can see these long, just straight lines down into the right are there because markets don't trade during those times. So this chart also goes to show, Bitcoin's 24/7 global market as opposed to these legacy fiat markets that don't trade 16 hours a day. And so you can see them going down overnight twice. And on this second day here, while there was another big drop in the markets, Bitcoin stayed very stable, in fact, up just a little bit. So you can see that decoupling, visually in this chart here.
100%. And one other thing I'll just call out before Isaiah and Matt, if you guys want to chime in with anything, but this is something I've been monitoring for at least a few weeks now, is this notion of decoupling, but for a specific reason. And it would be, what if the tariff headlines, policies remain uncertain? There's announcements back and forth. Trump announces a tariff here. This country announces a retaliatory tariff, all that stuff. What if that keeps happening? What if the Trump administration is okay with these equity declines and they don't really come up with another policy that they are going to try to support the markets with? This concept that they're just okay with the S&P going down. Maybe it's because they want the 10-year yield to go down as well. Let's assume that's the case. But then at the same time, what if there's a big Bitcoin buyer that comes in, whether that's the US government, whether it's a GameStop, a series of GameStops, another nation state? That would be a massive decoupling, to see stocks being weighed down by all the tariff and economic uncertainty. But then you have the big buyers in there pushing the price up. I think that's entirely possible. We might be seeing a version of that happen today, but I think that's entirely possible to happen over the next few months here.
Yeah, I would also add, it's hard to say, in a short time frame, hey, the decoupling's here. What I do think is really interesting is, again, you can look at gold over the last year, and in the charts that we just showed a little bit ago, gold's sold off, but gold's been really strong, right? And typically gold and Bitcoin are going to move up together because those are, the unprintable type of assets, the hard assets that people will move to. And gold has done fantastic and has done really, really well, pulled back a little bit with some of the tariff news. But even in the chart that Brady just showed with the different days, everything kind of ran up into the announcement on Wednesday and then kind of sold off. And Bitcoin went down and moved very similar to the other assets. But then today, or, we start to see the markets today, Bitcoin is like basically flat, slight up for the week, which is pretty wild then to start seeing. But I've heard countless on, Twitter and now X, Bitcoin is just correlated to tech stocks, which there can be days, right, when the correlation is 1. And I think that's really important, where they can all move off. If everyone's really nervous, really scared, it's going to sell off. But historically, that doesn't hold true. The numbers don't justify it. I've looked at this many different times over many different time frames. QQQ and Bitcoin are not correlated. They're, sometimes correlated, but for the most part, they're uncorrelated. They just kind of each do their own thing. So they are not going to trade the same. And I think we're starting to see that again here. And so we just emphasize that. And it's, interesting because we'll see what Bitcoin does over the weekend, right? Because it's, to Brady's point, it's going to keep trading. And typically it's going to be the early whistle as of, if it's the market's going to recover and there's some news that breaks, Bitcoin's going to start running in advance of the stock market because it's not open yet, right? In the same way, if it bleeds, Sunday night into Monday opening, you're going to see stocks continue to sell off potentially. So thoughts on that, Matt? Other things that you want to add?
You guys hit it. I mean, even Larry Fink says that Bitcoin is a flight to safety asset, right? If not now, it will be, a couple of days is hardly statistically significant, but the fundamentals of Bitcoin, they don't change. So I feel like we just had a tidal wave, hitting all the assets and markets. And looks like Bitcoin maybe just duck diving that wave a little bit better while things are getting hit. So certainly interesting to watch.
We got a real pivot here, Brady, from Joe Weisenthal, who I'm not going to call him a Bitcoin hater, but he's certainly not a Bitcoin proponent. And he just tweeted out a few hours ago, actually it was this morning, and it's only gotten to be more the case. He said, perhaps something to watch. In the last few days, Bitcoin hasn't been looking like a tech stock. He's among many people who've made this observation. Matt Cole has made this observation today. There is also, I saw James Seyfert of Bloomberg making this observation today. So these are people who follow the markets. I don't think this is necessarily getting through to your run of the mill TradFi advisor just yet. But if this performance divergence or decoupling continues, eventually it'll get through to those people.
I think it's like a little glimpse into the possibilities of the future. It may not persist, start now and then just correlation goes away and it's decoupled completely. I don't think we're saying that or that's going to happen at all. But it is a glimpse that it is possible and that it probably will decouple at some point on a more permanent basis, something like gold acts. So interesting day though, and it is being noticed by people in the traditional financial media.
And it's wild when there's things that Bitcoiners have said for years that people are like, oh, they're crazy. There's no way that'll happen, and then it starts to happen, and then you're like, oh darn, and then like all of a sudden, legacy accounts and big accounts that have not been pro Bitcoin start to parrot the same lines, and it's like, So it's interesting that sometimes just paying attention to folks that have been in Bitcoin for a long time, it's a glimpse into the future, and it's hard because sometimes you want to call that, hey, it's happening now, and it really isn't. But yeah. The risk on to risk off move when it happens will be something to watch for sure. And it'll be fascinating in a day that I think all Bitcoiners will certainly celebrate. So cool to see.
Yeah. I mean, it just shows the maturity of Bitcoin over time. And it makes sense. Has the last few years, especially in the past, 12 to 18 months, been integrated more and more into the legacy financial system. And it's just a matter of time as this thing matures and gets integrated more and more and adopted more and more into the financial system and into government balance sheets, corporate balance sheets, et cetera, that there will be a decoupling. It is a fundamentally different asset. It's a strictly limited, commodity. And so it should definitely be trading separate from stocks. And that'll just take some time and some, increase in understanding about what this thing is. But we're getting there for sure.
Should we talk tariffs a little bit, Brady?
Yeah, let's talk some tariffs.
Yeah, we obviously touched on it a little bit, but given that this has kind of been the main driver of the volatility, plus we had the big Trump press conference, I feel like we should talk about it a little bit more specifically.
Liberation Day. The branding of Trump campaigns always cracks me up. So I like it. It's in terms of it's bold. It's obviously a very bold move. It's something that's different. We haven't used this tool for a long time, coming from the United States. Of course, other countries tariff us quite extensively. But let's take a look at here's the big board of that was released, and we saw Trump holding this, at least one half of these, the left half, printed out in the Oval Office and holding it up, which was a great photo. I saw an awesome meme, just as a quick fun aside, that it was like showed Trump holding up the card, and it said, "Me showing my son my $5 parlay that for $780,000 or something like that." It's just like this 15-part parlay. I thought that was fantastic. So I guess the strategy here is to calculate cumulative tariffs that the United States is charged by these other countries to import goods, and basically charge those countries in a reciprocal fashion half of what they charge us. And that's what this chart shows for quite a few countries around the world.
And there is a little background to share here. I'm sure you guys saw this in some way, shape, or form on Twitter, but those numbers that are on the chart that show it says like the tariffs that they charge us, and then in smaller font, I believe it says also including the effects of trade barriers and currency manipulation.
Yep.
And if you're thinking, oh man, that seems like a pretty difficult thing to calculate, right? There's huge debates over what constitutes currency manipulation, what really constitutes a trade barrier. That is like, these are super subjective terms, right? How could you calculate that down to a percentage point for 100 or 200 countries? And it turns out that they used a little rough rule of thumb here. I forget exactly what it was. Maybe one of you guys know it.
Yeah.
Isaiah, do you have it on hand?
Yeah, so there was a really good tweet that I had saved, but it's like they didn't actually calculate the tariff rates and the non-tariff barriers as they said they did. Instead, for every country, they just took our trade deficit with that country, divided it by the country's
Right.
exports to us. And the joke that I saw was, it's like, hey, you have 3 months for the assignment, and the night before you ask ChatGPT for the answers. That's what you get, right? And so it's one of these things where if like you're a pro Trump person, you're like, hey, these are great. And then if you didn't like Trump before, you're retweeting and talking about how dumb this is. And it probably is somewhere a little bit in the middle, right? Where I look at things and it's like, well, if you've done the same thing for 60 years and it's like kind of hollowed out and destroyed some things and made some issues, well, the definition of insanity is redoing the same thing. So kudos for maybe trying something different. But if you say something, you probably want to actually do it. And it seems like maybe reciprocal tariffs is not exactly what we're doing.
Okay.
We're kind of making our own definition for how that's being done. So maybe our tariff math, we need to go back to get a little extra tutoring on the calculations there.
Totally. And I think we try to be balanced here. Everyone has their own views, but we're going to try to be balanced when we're on this show. I think Isaiah did a good job of being balanced there. Brady, if you can bring it up, there's this tweet from the Long View. His name on Twitter is @beautiful. You're quick. This
I got you.
probably easier for people to. I won't read the whole thing. You know what? Maybe I will. It's not that long. While I can understand why people don't like Trump's strong arm methods, I don't get the wholesale disdain for tariffs. The U.S. has a boatload of protections, such as workers' rights, environmental regulations, financial reporting requirements, payroll taxes, social benefits, building codes, etc. Why on earth would you hold U.S. workers to these standards but let goods in from overseas that don't meet these criteria? Especially when they also impose tariffs and trade barriers on our exports, meaning our exports, meaning U.S. exports selling to the other countries. I'm all for letting the cheapest workers do the job, but level the playing field. And I think this last sentence is the like real. I think this is really well written, in my personal opinion. Don't tie our workers' hands and guarantee that they are perpetually uncompetitive. I think this is really well done here in this tweet. I don't know who this person is. It's an anon handle, but and I'm not necessarily defending exactly how the Trump tariffs were announced on Wednesday, how they did that kind of dishonest calculation like Isaiah just walked through. I'm not defending that. I'm not saying that this is going to be a silver bullet that's going to fix all of American workers' woes. But I do think, as Isaiah was alluding to, it's not crazy to say there needs to be something done here, that this current system is quite unsustainable from benefits for American workers. What's the point of having these big requirements that you make American companies go through in order to operate and sell a product? If the end result is that they just can't sell the product, you just regulated them out of existence. Like, you didn't really do anything beneficial. And there's tons of different trade barriers out there. You would have to go kind of on a case-by-case basis to say, what is this country doing to us? How can we balance it? And what we kind of saw is that the current administration basically just said, they kind of made an assumption that the trade should be balanced. And then they said, all right, let's take what we're selling to them and they're selling to us, and then we'll charge them some number to try to get it closer into balance. So a bit of a blunt tool, to say the least, is what they're doing. But yeah, that's some background on kind of how the tariff announcement went. And I gave a little bit more of the pro-tariff view here. If you guys want to give the other side of why maybe this, isn't a good idea, I'm obviously open to hearing that.
I went and kind of made some comments on tariffs. I probably lean a little bit more to let's try something different. Again, I'm showing my cards there a little bit, but I had some pushback from some Bitcoiners in my feed talking about, like free markets and, tariffs are dumb, and sending me some things to read from libertarian writers, which I would say I agree with, right? Yes, free markets, ideally let everyone kind of specialize, do what they need to do, make it the best, most efficient way. That's not the world we live in, though. Like, that's the problem I have with that take is it's great if everyone agrees to those rules, but when you have various different countries that are going to do it regardless, then you have to say, let's negotiate and come to the table. And I think that the White House is saying, there's aides saying they're not negotiating. If anyone's ever watched Trump operate, the man is a negotiator, right? And so the whole thing to me is it's all about a negotiation of getting something more fair in his mind. It's not about making sure that it's a 67% made up fake tariff, whatever, right? It is getting to the point where the United States is respected. We can make more stuff here. 2020 showed that we make nothing. It causes major issues. And if a lot of the things that we need to run our economy are made overseas, and all of a sudden those folks maybe aren't as friendly, that's major, major issues for security. And there's tons of other ramifications. And yes, like there should be some things that come back here, but it's going to take time. I think, John, maybe as before we even hit record, it's like, it's going to take a long time for it to come back, just like it took a while for it to leave. Like, it's not going to be overnight. It's not like, hey, into 2025, look at all these manufacturing jobs back here in, the Midwest. Like, that's not going to happen. It's going to take time, but it can allow for entrepreneurs to do their thing. And I think ultimately that's what we want to do, right? Don't make it impossible to build stuff here, and give some incentive structure and deregulate. And I think that if you look at Trump policy, it is deregulation. It's kind of having these tariffs be there. And it is trying to figure out a way to navigate from a situation that they didn't create, the administration before them didn't create. It's been a compounding effect of bad decisions for a number of years of making the economy fairly fragile, right? And so we're not nearly as balanced as what we've been in the past. We financialized everything. And maybe that's been at the benefit of a lot of folks, but not everyone. And I've seen the arguments on the, tariffs are dumb, of like, look at the consumer, everything's great. America, has all these wonderful things and our quality of life is so much better. But then you can have the same, thread on look at incomes and look at the cost of housing, for example, and like that huge spread. Not everyone's, making the same amount when the housing prices goes up 200%, but your income has only gone up 40 for the average worker. It's like, that's crazy. Like, that's unsustainable. And that trend is not going to stop, like Lynn Alden, nothing's stopping this train, right? Like, so how are you you got to square this somehow to make that adjustment. And the last thing I would say, at some point, you can't have, a class that is just owning all the assets and having all the benefit with vast majority of everyone else not. Like, that won't work. That ends with nastiness that we don't want to get to. And so I think trying to course correct where we're at today makes sense. And whether it's the right or wrong thing, we'll know in the future. And that's the beauty of how markets play out and how we'll see how these tariffs are. I think you're fooling yourself if you don't think Trump and team are negotiating. Like, this isn't going to be a long-term thing.
Yeah, I agree with that. And just look at, what played out with Mexico with, the huge tariffs that Trump announced on Mexico, and a week of negotiations later, they're providing more border support and whatever else that Trump got out of that negotiation, much lower tariffs than were announced for sure. So this is just an opening salvo for negotiations. As far as the tariffs go in general, we have financialized this economy. I think it's something like 30% of our economy is the financial industry, and is maybe 5% 30 or 40 years ago. And that has, and the reason that is because our main export is turned into dollars. That's what we do, is we export dollars to the world as, to provide liquidity for the global reserve, as the global reserve currency. And, we're buying stuff in return from everybody else. And lots of industry has moved overseas so that they're, cheaper wages, et cetera. And then we end up buying that stuff back here. It's been a good arrangement for the United States in terms of, a pretty good deal for us, but it's had, economically speaking, but it's had, we're in this position now where we have an economy that isn't capable of producing a lot of the very important, inputs for very important industries in this country. And so if something does go wrong, we have less control over, over those inputs, and that's a security issue, right? And we have, an industry, the financial industry, that's just not as productive and beneficial for Americans as a whole, right? It's serving the world, it's serving the people with money, the people with capital, and that's a very small number of people ultimately. So a financialized economy does, and fiat money in general does tend to stratify the classes so that you have a very small number of people who control a large percentage of the wealth. And they're able to, use that wealth to buy assets that are relatively scarce compared to the US dollar, right? And so that just, you create a system that's basically rigged to make the rich richer and the poor poorer. That's the way it works. So I think leveling these things out a little bit by bringing some industry back, having more actual goods being produced here that people have demand and need, and not just financial services, is probably a good idea. I think this is a negotiation tactic up front, and it'll be a lot more reasonable, and the market will see that in the coming months.
I think to this point that we brought up about it being a long process of, the US lost millions of manufacturing jobs and industries over the course of decades. It's not, Isaiah, brought this up. It's not, you can't just slap a tariff on and then expect that to come back quickly. Why is that relevant? One is just, this is not a silver bullet. Let's be clear about that. Number two is this, it's not like the Trump administration is the Communist Party of China and they can just say, hey, we're taking a 25-year view here. And what are you going to do about it? Right. That's not how the US system works. They only have a 4-year term. They're going to start worrying about midterm elections pretty soon. I don't think well, number one, I should just say, even if they are willing to tank the markets for a particular policy, it's only going to last as long as that administration is in power. But they might even lose the ability to do some of it if they lose the midterms, right? Because then you just can't enact as much starting after the fall of 2026. So that's one thing to keep in mind. Anything that Trump puts on as an executive order by tariff could come off with another president with another executive order. And then there's this other politically palatable thing, which is just, do you think that the Trump administration has the ability to just enact their policies and say, hey, the markets are going to be crushed for 1, 3, 5 years in a row? I don't really think they have the ability to do that, especially when you consider where the US debt to GDP situation is. And this gets into the Lynn Alden meme of nothing stops this train, because if you have debt to GDP that's that high, and this is what Brady was just talking about too, also with a financialized economy, it's really hard to let the markets tank for an extended period of time without seeing GDP and tax receipts go down. And you're trying to cut, in theory, this government spending at the same time. You're going to end up harming GDP. You're going to harm tax receipts. Your debt to GDP is going to be even worse. This is what people like Lynn Alden and Luke Groman have just been banging the table on. Lynn just tweeted today. She wrote, tax receipts in the US tend to be pretty correlated with stock market performance on a lag. That's one of the reasons why the deficit train is so hard to stop. So for all those reasons, I don't think the Trump administration has this ability to just say, hey, markets are going to get crushed for an extended period of time, because it's going to feed in through GDP. It's going to feed into tax receipts. It's going to make the fiscal situation worse. It's politically unpalatable. So for me, it's one of these major Bitcoin thesis things. All roads continue to lead to inflation, to continue to lead to currency debasement. Are there pauses and potential reverses along that road? Sure, there are. But I don't think this is some sort of like pivot to sound money and balancing the budget anytime soon, right? I think the big major foundational reasons to invest in Bitcoin are perfectly intact. If anything, you could make the argument that some of these policies that are rattling the markets, that the Trump administration will be forced to do something to support the markets. And when they do some sort of pivot, either away from tariffs or some other lever that they pull to support markets and expand ultimately the money supply, I think Bitcoin could react to that in a major way.
Well, here's one part of that attempt, perhaps, John. He's, now he announces the tariffs and also publicly pushes Jerome Powell to cut interest rates.
Funny thing about this is, so Luke Roman was on with Danny Knowles, who took over Peter McCormick's What Bitcoin Did. Shout out Danny, does a great job. And Luke was saying how it was only 6 weeks ago that Scott Bessent was saying, oh, you're not going to see the Trump administration saying, stating that Jerome Powell should lower interest rates. You're not going to see any sort of pressure like that. Okay. Fast forward 6 weeks later, and we're back to tweeting that the Fed chair should lower interest rates. So, just that's a good reminder. Just because the administration says on a particular day, hey, we're not going to do this anymore, just wait a couple months and they might be back to running those same playbooks.
Well, wouldn't that counteract or help counteract any, shakiness that tariffs might produce in the market to say, okay, we're cutting interest rates? That, equity markets would appreciate that, would like that, probably run. It tends to stimulate things. Is this part of the strategy? We're going to try to offset some of the near term, difficulties of imposing tariffs with, a carrot like Fed rate cut.
Well, I think
Go
one
ahead,
of the things
Isaiah.
they talked about too, though, is this Department of external revenue service, right? Lutnick's talked about that, and the idea of cutting tax rates on individuals, and other people are going to pay for it, right? If you do tariffs and then don't adjust tax rates, that's obviously a bad deal for a lot of people. But those two things would have to then come together. So the other shoe has to drop there. If they don't do it, then yeah, they'll reverse course here fairly soon. But if they can say, hey, we're going to have a way to collect this, and we're going to lower tax rates, and we're then going to lower interest rates, maybe then that could spark the market to move back higher. But I think just doing the tariff piece of it, yeah, it's going to cause major ripple effects. That's going to be probably determined to be negative versus some of those other things people could look at and say, ooh, that's bringing liquidity back. Ooh, that's bringing XYZ to help pump and push asset prices. Because yeah, back to Lynn's point and John's point, I've always said, like, the 401k for the average baby boomer is a national security risk. You have to keep that thing going up higher, or there's just no way to pay for stuff. They can't let that crash. They can't let that be a 3, 4, 5, 6 year down. Like, it's got to be a V shape down and then back up somehow. And you might not like that, but that, I feel like, is kind of the spot that we're at.
Yeah, it's like how committed are this administration, to this idea? Like John said, going to midterms next year, you think they would have everybody upset about their portfolios, the retirement? Like, I don't think so. It's only go on so long, or maybe this is just a tactic of negotiation, right? This is to be seen. But yeah, it's like, I think Groman said something like, it's like performing a root canal with a shotgun, right? This type of tactic. So we'll see what happens here.
All right, let's see. What do we have next? Should we jump in? We should mention this real quick. Terra Luna and Galaxy. Galaxy was this week. It was made known that the New York Attorney General settled with Galaxy Digital for $200 million over Terra mishandling. BitGo CEO Mike Belshi said this was not ethical, and he called out Galaxy's pump and dump tactics, demanded real crypto regulation in the industry. You can see here. I'm not sure where that came from. Hold on, guys. Let's see. Yeah, right here. This is the sales, the evidence here, as Novogratz was encouraging followers to keep the faith and posting publicly about Terra Luna. Galaxy was dumping. This was the first, like in the second week of January, basically sold $100 million worth of Luna while publicly pumping it.
So
and he's got that tattoo. You guys,
that's what I was going to say. The tattoo is $100 million worth. So I guess that's the price. We're getting a tattoo on Novogratz.
That's right.
That's rough. Those are the receipts right there. Hard to argue with that. The big takeaway for me is, PSA to anyone who thinks that they're going to successfully figure out when to trade an altcoin. It's like, if you just hear someone saying, promoting an altcoin, this is the next big thing. There's one other thing I'll just add to that story, which was that Novogratz was on, I think it was Bloomberg or some big financial media, saying that UST, that was the stable coin part of their algorithmic stable coin, supposed to be pegged to $1, and then Luna was the one that floated. He said that UST was being used for payments by millions of people in Korea. And it turned out that that was just like completely fabricated. Whether or not Novo believed Do Kwon and then just repeated it, or whether he knew it was false, I don't know. I'm not going to speculate, but just beware that if there's some new crypto project and someone out there is saying, oh, it's got all this real world adoption, it's doing this, this, and this, not only might it not be true, but the person saying it might literally just be trading completely against you.
And
so
almost always, in almost all cases, really, usually, right? Yeah, this is how these things work. There's, back channels that happen. And Corey was explaining this the other day, kind of these layers. You find the Telegram group and it feels like an insider Telegram group, and you're an influencer, and they're giving you tokens to pump it on your channel, etc. And then there's the Discord, which is like the insiders, and everyone there feels really special. And then there's the text group thread that's happening with like 5 people, the real insiders. And that's how this thing works. And they pump it up, and then the insiders on the group chat dump it first, and then it kind of goes down the chain. And that's how these things work. They're scams, guys. So Bitcoin only is the way. It requires patience. It's not easy to hodl. It's a simple thing to hodl, but it's not easy. You got to decide every single day when you wake up, I'm not going to sell my Bitcoin. I'm going to hold. I'm going to continue accumulating. This is a long-term investment. So it really does help you change your time horizon and think long-term as an investor over a long period of time. This is a store of value. And we'll get to the medium exchange part, everyone. We'll get there. But right now we're in the store value phase, and it's going from a speculative store of value to an established store of value. And so that's where we are. It's just stay away from that stuff. You'll get burned. And here's the perfect example of the ultimate insider, Terra Luna, cashing out $100 million worth of the token on top of retail. That's how it goes.
He's telling people publicly, like, they're going long, right? And then they're going, they're shorting the heck out of it. So retail always gets stuck holding the bag. And this is the VC sort of shitcoin playbook. It's unfortunate, it's super unethical. This is how it works, though.
To call it unethical is too nice.
This is why we're Bitcoin only.
It's a family show.
This is what we do.
Keep it nice.
It's a different thing. Bitcoin's completely different from crypto. It's and I think we've made that point, and that knowledge seems to have gone through the legacy media and into investors and etc. It's Bitcoin, not crypto. We've been chanting that on our social media accounts for years and years and years. Corey, our CEO, has been fighting against these crypto scams for a long time, and that's why we're Bitcoin only. So it's just the only way to go and run a business, an honest business.
Do you want to talk? I mean, Dorsey had the conversation this week about Bitcoin fails if it doesn't break the store value narrative. You guys want to talk about that? Because I think it's interesting.
It's a loaded one, Isaiah, but we should at least cover
it. I have some thoughts, and I think Jack's wrong, but I mean, that's
spicy.
It just depends on how are you framing success or failure. And I think it's so unique to each individual. But if Bitcoin just became a store value asset that was a non-state asset that you could hold and control, and it didn't become money, do I think that would be success in my book? No, I think Bitcoin is obviously much more than that. I think we would all agree with that. And to Brady's point, it's like the medium exchange part is coming. Like, that is coming. The store value comes first, and there's lots of great writers and folks that have talked about this forever. But if it's just a digital gold, it's only digital gold, and you look at gold's market cap from here, that's a 10x. And like, that purchasing power, is that success for someone that saves into that asset? To me, that's yes. That's still a yes. If someone can save into an asset and they can increase in purchasing power so they can do the things they want to do in their life, that's still not a failure. I get what he's trying to say, but I think that it will be more. But yes, I don't think it's a failure if it becomes store value.
I heard him say that, he called out the title of the white paper, right? Like, if we don't get back to the title of the white paper, Bitcoin will be a failure. That's the way I read that was, this was the original mission of Bitcoin, right? And we need to have Bitcoin be the currency of the internet and medium of exchange. I've said this before, but I don't think I've said it very often. I wonder if, Satoshi was very wise about many, many things and thought this system through extremely thoroughly. and thought through the distribution of the coins, the distribution schedule, and part of that had to have been an understanding of how to bootstrap the network, right? So he's thinking about how to bootstrap the network. I think he probably figured out no one's going to use this as a store of value, right out of the gate. There's just, you have to build up trust, and adoption in order for people to see it as a store of value and hold it over the long term. So the first initial use case is going to be, and if you look at, monetary history, money starts out as a curious collectible, right? I think is how Nick Szabo puts it. It's a curious collectible. And it's something that a small number of people value. They think it's interesting. They want to engage with it, make it kind of a part of their lives. It's something that they really enjoy. And that's what happened with the cypherpunks. This was something they've been working on for decades, was, cash, online cash. How do you make it work? And so that was very interesting to them. And the use case at that point could not have been store value. It could only have been payments. And so is a peer-to-peer electronic cash system. And I would imagine, to me, I'd like to think that Satoshi thought that through, and of course it's a good store of value. That's also coded into the system. It may not be the title of the white paper, but it is a strict limit of 21 million coins. No inflation, can't inflate it, right? So it's the definition of a good store of value in the code. It may not have been the title of the white paper and the way it was quote unquote marketed, right, initially, but that's because you can't just jump straight to store of value. So I don't think Satoshi necessarily thought that Bitcoin should only be peer-to-peer cash because that was the title of the white paper. I just don't think that. He's too thoughtful about putting everything together. I think he thought that through. So as we know from monetary history, you go from curious collectible to kind of an early stage store of value, a speculative store of value, to an established store of value, to a medium of exchange, to a unit of account, where you're pricing things in Bitcoin. And that's where we are. Medium of exchange is going to happen. It's just going to take time and patience. Adoption by big governments and big corporations using Bitcoin as a store of value is not going to prevent the natural evolution of this money into also being a medium of exchange.
Did you guys see NVK had a good tweet about that, Brady? He said, Bitcoin peer-to-peer payments won't happen until people need it, not because you want it.
Yeah.
Right now, people need anti-debasement protection. That's why HODL doesn't need much convincing. I thought that was pretty powerful.
Yeah, I think he's right on.
100%. And Brady, yeah, you definitely said some stuff there that I think is spot on, and I had not really considered before. So I'd need to think more deeply about it, but that was fantastic, because I think what you're getting at is we've all seen, most Bitcoiners could repeat this, what you went through, collectible, store of value, medium exchange, unit of account. And generally speaking, I do think that's true, but it's almost like there's a nuance at the beginning when it's like brand new and you're telling people why to use it, especially for Bitcoin specifically. When it's coming about in this digital age, you're saying it was way easier to say, hey guys, digital payments tool.
Yeah.
Right. Like on day one, you never could have said to someone, hey guys, digital store of value. Like,
right.
Put your life savings in here. We just started, but put your life savings in here.
Even though the properties of the network are the perfect store of value, but it's just, it's too early. No one's going to use it for that. They want to collect Bitcoin and mine it because it's cool and it's interesting. And you have these group of friends online that are trading Bitcoin back and forth like a Pokemon card or something. It doesn't really have monetary value yet, right? Just people are trading it around until, Lazo bought the pizzas. And that's the curious collectible part of it. People are just mining with their CPUs and getting 50 coins, and there's this little fun competition. How many do you have? How many do you have? And that's all it was, right? It's to the point where Lazo's like, yeah, I'll throw 10,000 Bitcoins at some pizzas, right? So it was just a curiosity, something fun, something interesting, a project they were drawn to. And yeah, the first use case of these people who are on the internet and really excited about this project of eCash is going to be to exchange it for goods and services and just collect it. Yeah.
Maybe the way to frame it is that the first actual usage amongst the nerds and the insiders is going to be collectibles and payments. Actually, none of the nerds are really going to use it for store of value, even because they're like, hey, this is brand new. okay, could it store value one day, but not right now.
Right.
So it in a weird way, the insider group, it kind of skipped over store of value.
Yep.
But I don't think that changes the fact that the first widespread usage is still going to be store of value. You're not going to get widespread, I'm talking millions and millions of people to use it for payments. And that could launch into, I wrote a tweet about this past weekend, all the reasons why I think people forget how hard, when you're talking about using it for payments, you have to compare to what we use for payments today, which most places is, let's just talk about the US, it's the dollar. So you have to talk about how entrenched the dollar is and how good or bad of a job the dollar does for payments. And whether people like to hear it or not, the dollar actually does a pretty good job at payments. So I don't think that means Bitcoin has failed. It just means that developed countries don't really have a major payments problem. And to points that Isaiah and Brady, I think both of you made, we're not saying it never will get to payments. We're just saying eventually it will. It's not what's needed now, and it takes a really, 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 really long time to displace the dollar. So that's kind of where I come down on it.
Well, go ahead, Matt.
I would say the other thing is, so many people, unless you're really, I would say, intellectually interested in Bitcoin, which again, us here, people watching probably fit that category, but broad use of Bitcoin as medium of exchange, no one wants to deal with capital gains treatment. So, Bitcoin strategic reserve, great, cool, awesome. You want to see Bitcoin adoption happen, treat it as money. It is money, and allow it to freely float and compete against the dollar as payments, as all those things. That's when I think you could see it change. And maybe there's some de minimis rule. Maybe it's going to be a stepwise function. It's going to take time. And back to a lot of stuff that you said, very well, Brady, it's that part of this is coming, but people need to hold it, understand it, get to know what Bitcoin is for the bigger adoption. But yeah, it is interesting on the early side. Yeah. Send it, spend it, do whatever. Like it's not real yet for store value. And then all of a sudden it's like, ooh, it is, right? You could go to a website and click, give me 5 Bitcoin. Yeah, and it was free, and you could just go get it because people are giving it away, right? Like, what's that Bitcoin worth today?
There were literal faucets where you could just go get Bitcoin.
Wow.
I think the demand that will bootstrap medium of exchange for Bitcoin doesn't come from the consumer side. It comes from the producer or the business side, because the business is stacking Bitcoin, right, for their treasury. And it's just a natural extension to be like, okay, you have to pay me in Bitcoin. I want Bitcoin. I don't want the dollar, because I'm just going to buy Bitcoin for my treasury anyway. Right. So that's, I think, where it comes from. And then consumers are forced, if they want to, interact with these businesses, to pay in Bitcoin, or business might say, I'll give you a discount if you pay me in Bitcoin. Right. They're not going to have like network fees for Visa and MasterCard and stuff. First of all, they're not going to have to go and buy the Bitcoin. They can just stick it right in their savings account. So to me, that's where the demand comes that produces the medium exchange phase. And so it's not necessarily that it'll be caused by like a trouble with dollar-based payment systems. It'll be because businesses are demanding it.
Shout out to Michael in the chat who called out the capital gains issue as well that Isaiah was speaking to. One last thought, Gresham's law, right? So if you have two competing currencies, the stronger of the two will be kept as store of value, right? You're going to get rid of your less strong, weaker currency before you give away your store value currency. So I think that's what's happening now. And I don't know, I've purchased with Bitcoin before, but for the most part, like I'd rather give my dirty fiat before I give my Bitcoin.
Yep. All right. We've got this. We kind of discussed some of the topics in this clip, but we can maybe revisit them just a little bit. This is Tom Lee on CNBC. It's also got some price prediction, price action stuff in there. I actually meant to play it earlier in the show, but
Bitcoin's
I think it's still
recent near-term lows. I guess again, it's been under 80. It's not quite there yet. It definitely is a risk-off trade, and when the Nasdaq goes down, Bitcoin seems to go down. But it also really likes the idea of more Fed rate cuts or the Fed being more lenient. So if we get that on Friday, is this a decent time to be stacking?
I think so.
You do at 80.
Yeah, I think part of this was Bitcoin seasonally was just not going to be attractive until after March ends. And now we're finally exiting March. And so I think not only is the calendar looking better, but as you're saying, Fed and central banks are easing, QT's ending. I think that with positive Washington tailwinds means I think Bitcoin can do well to the end of the year.
People love it when I ask you what your own target is on Bitcoin.
Yeah,
and makes people very excited.
Yes, and I mean,
one crazy high again.
I think it's still 150 or higher as possible. Okay. I know it doesn't feel like it, but once we get through this tariff and that agenda around tariffs, markets can look forward to things that could be positive.
Do you agree with what Larry Fink said just about the idea that the dollar could suffer as a result?
They want it.
Bitcoin, yeah.
Yes, I mean, I'd say that Washington understands that too. That's why stablecoin, really getting the right sort of legislation for stablecoin is important, because in crypto, when it comes to stablecoins, the dollar is way more dominant there than it is in traditional markets. So I think you actually protect the dollar with stablecoin legislation.
Yeah, several good ideas there. We obviously talked about Joe Kernan started out saying, obviously, Bitcoin's correlated to stocks, and so blah, blah, blah. The next day, I think it was the next day from this clip, we saw what we talked about at the top of the show, that sort of decoupling. So I don't think it's so obvious, but it is certainly mostly been the case. He then also, we got into the price action. He's bullish still. We're going to go to 150. That's coming into like like spring and early summer and stuff. We'll start seeing some action. Then it finished up talking about Larry Fink's comments, and we can actually dive into that now, John. You want to take it from here?
Yeah, perfect. Thank you, Becky Quick, for the segue at the end of the So this is Larry Fink writing, I believe they call it like an annual letter to BlackRock shareholders, or some sort of annual investment letter type of thing. And as many people like myself did, pulled it up and Control F for Bitcoin. So this is the main Bitcoin section here. All the other references to Bitcoin in this particular BlackRock letter were about their IBIT, like they're saying this, the IBIT launched at this, it was one of the best of all time, blah blah blah. That's all interesting, but what I found more interesting is people like Larry Fink and BlackRock talking about the macroeconomic implications of Bitcoin rather than their particular product. So as you can see at the top here, it's, can Bitcoin eat away at the US dollar's reserve status? There's some text here. I will just read the last line of that section. And it says, if the US doesn't get its debt under control, if deficits keep ballooning, America risks losing that position to digital assets like Bitcoin. And then the chart shows US federal debt held by the public. In case anyone's wondering what by the public means, this strips out debt that an intra-governmental agency might hold, like Social Security, for example. And it does make sense to strip that out, because that's literally like one pocket of the government owing debt to the other pocket. You can just cancel those out. So that's why you'll see different numbers quoted for debt to GDP. Sometimes you'll see something like in the 120s. Other times you'll see this number that is more like 100. This strips out the debt that Social Security owns. Either way, it's a very high number. You always want to make sure you're comparing apples to apples there. But basically, takeaways, federal debt as a percentage of GDP is the highest it's been since World War II. There's a bunch of things we did after World War II to get that debt down. They're all pretty draconian measures. And I think the next few years is going to be policymakers realizing that it's really, really hard to get that debt down. And some policymakers, some parts of the government have forecasted that they're not even forecasting that we will get the debt down. There's the USCBO, Congressional Budget Office. They actually released their 30-year budget outlook. Did you guys see this? It made like 0 waves on Twitter. I've been meaning to do a thread on it. This is the thing with the pink line chart where they forecast 30 years in the future what debt to GDP is going to do. And they just put out the latest 30-year forecast. And I'll do a thread on it soon, but the punchline is that it's still a line that goes up and to the right. They're not really forecasting for it to come down anytime soon.
Was that north of 50 trillion or something crazy?
So funny you asked that, Matt. They don't make the total debt number readily available. Personally, I believe that's by design. They don't because that's such a big headline number. They make you calculate it. It's just simple math, but they'll give you the GDP number on one page. They'll give you debt to GDP, and you have to calculate what that implies for the debt. But I think they don't want a big headline that says we forecast the US will have 150 trillion of debt by the year 2055.
I think to build on, Fink's comments and then go into like CBO and some of the other things, like Scott Bessent, talked about, and this is a quote, I'll just read it real quick. In the next few years, we're going to have some sort of a grand economic reordering, something equivalent to a new Bretton Woods. There's a very good chance that it happens in the next 4 years. I want to be a part of it. And so talking about this restructuring, talking about this debt, the amount that's held, Fink talking about, Bitcoin. I like how he has to hedge it a little bit so he can still, support broader crypto issues and projects and stuff. So he opens the door for BlackRock to do that. He can't just say it's Bitcoin. It's and other digital assets. To me, they're telling you this is where it's going to go. There's got to be something that's got to be changed. And I think that's a big theme of a lot of this conversation, whether it's the tariffs, whether it's the debt situation, how to increase the dollar. Tom Lee kind of talked about that. Hey, stable coins are going to be part of keeping the dollar relevant and making sure we get dollars around the globe. And that is all kind of coming to a head. I also think the other thing interesting in that clip from Tom Lee was actually at the beginning with Joe Kernan. Can we appreciate him talking about stacking? Using that term on CNBC of just saying stacking.
He's orange pills.
That's incredible. Man. I love that.
Joe's based. I love it too.
The fact that you have a CNBC host saying stacking, and I know he's pro Bitcoin, and it's always fun to see him kind of push back on guests that are anti Bitcoin. But again, people talk about the Overton window, stacking on the financial media like that is pretty cool.
Yeah, Joe hangs out on Bitcoin Twitter. He's probably watching this show actually. Hey Joe, we appreciate you, man. He's a consumer of Bitcoin media. Oh man. Well, guys, what else? What have we hit? We got through the agenda. So, any other topics, or we can wrap things up?
I'll go with Tom Lee or higher with his price prediction.
Okay.
Tom Lee is the floor. I like it.
Oh yeah. Let's do quick takes. We'll go around the horn. Matt, any final notes?
I'm not a bear. I'm conservative. I would be thrilled with 150K Bitcoin price by the end of the year. That. I mean, what is that? 40% up from our previous all-time high. That is totally possible, and that's kind of what I'm hoping for. But yes, it'll get to $1 million at some point. Is it going to happen this year? It's no, I don't think so. I think 150 is perfectly an awesome target.
Isaiah,
I'm an or higher. Only a 2x from here. I think there's a lot of stuff and some fun things that will happen. Again, I would agree with the way that Tom kind of outlined it. You get through some of the narrative, some of the noise that's happening, and all of a sudden rate cuts alongside with this. You get some of the announcements from the group that's kind of looking at how to acquire, for the strategic reserve, all these different things that can come out over the summer into the fall. And going back to John's point, you have midterms. People want to feel wealthy. There's games that can be played. There's things that are going to happen that I think are going to be pro liquidity into the market. And, Lynn and Sam Callahan came together and talked about when liquidity comes in the market, what absorbs it first? It's Bitcoin, right? And I think you just see Bitcoin go and move. And maybe it's late in 25 and 26. Maybe it breaks a little bit of the 4-year cycle just because Bitcoin likes to do things that challenge the previous playbooks. But yeah, I would say I think the fun can get started as far as Bitcoin price movement, probably into the fall and into the future. But, we'll see. I've been wrong. I'll be wrong before. It's fun that this is captured and people can play it back to me and tell me why I'm wrong. But yeah, I think it's at or higher for the price prediction.
Well, if any of us is wrong, we'll just cut it from the show. This is not a live show.
Memory
right?
hole it.
Good. So I'll answer somewhat indirectly, but I think the way I'm thinking about it right now, and I believe if anyone tells you, when the market's going to turn on a particular date, you should be skeptical of that person because that's just excess precision that they probably don't have the ability to call. So I like talking more in terms of ranges. And my general view is that the short end of this market volatility, which I think Bitcoin is at least somewhat affected by, again, we talked all about the decoupling today. That's the name of the show, but still, it's easier for Bitcoin to rally if the stock market is going up. I think everybody agrees with that. So I would say general market volatility will continue on the short end of the range for another month or two. And then on kind of the long end of the range, if I'm just saying what's the longest I could really envision this going on before the Trump administration is going to pull a series of levers to support the markets, I would say it would be like beginning of 2026. That's the long end of the range. With that said, talking more specifically about Bitcoin, Bitcoin has the X factor of a big buyer coming in, whether it's the US government, whether it's a corporation, whether it's another nation state, and really, making a big splash. And people are going to say, wow, that entity's buying a lot of Bitcoin. That could cause Bitcoin to go up. That same wildcard does not exist for US stocks, right? There's no potential for some big company to say, hey, we're coming in and buying the NASDAQ, and then NASDAQ pumps, right? That dynamic does not exist for traditional markets. So that's kind of my view on how long the market softness could last for, as a pretty big range, but wanted to give that. And then the wild card for Bitcoin, it exists for Bitcoin. It doesn't exist for other assets.
Yes, the X factor for producing HODL FOMO, which is the fear of missing out on accumulating the greatest store of value in the history of humanity earlier than everyone else. HODL FOMO will be absolutely, in my mind, I don't see how it's possible that it could not be kicked off by the United States passing a bill through Congress, signed by the president, to start stacking Bitcoin in the US Treasury. I don't know how that could not set off HODL FOMO, the suddenly phase, whatever you want to call it. That's the thing. So if the Bitcoin Act, which I think Bitcoiners should really turn their attention to now, is the next big thing. The executive branch, they might find some budget neutral ways, because they can't alter the budget. Only the Congress does that. So they can find budget neutral ways to move money around and maybe buy some Bitcoin, but it'd be maybe tens of billions of dollars. The big money lies in the Bitcoin Act. If that passes, we're off to the races, and sky's the limit. I have no idea how I could get at that point. National or global race to accumulate Bitcoin on sovereign treasury, balance sheets, and of course then corporate balance sheets all over the world. So that I think will absolutely set it off. Let's try to make it happen, guys.
Q3 liquidity then.
Say again, Matt.
I'll say, so Q3 liquidity coming.
Could be. I'll just call out intraday move here. Stocks are basically at the lows of the session. S&P and NASDAQ are both down over 5% on the day. Bitcoin is holding in just below 84K. That's where we're at as of 3 p.m. Eastern.
All right, gentlemen, good show. Swan Private Wealth. All three of these guys are on the amazing Swan Private Wealth team. We develop really strong relationships with our clients, and we've got expert Bitcoiners here to help guide all of our clients into the future, our Bitcoin future. And we just have a great time with all of our clients. We meet up with them on a regular basis. We throw events all over the country. We will be, I think we're having some 50-some events this year, all over the country, many different cities, Swan Salon gatherings. So if you're a Swan private client, you have access to those. We'll let you know when they're happening. You'll be invited. If you're interested in joining the Swan Private Wealth Squad, our family, you can talk to one of these guys. You can go to swan.com/private and submit the form there, and one of these guys will call you back right away. We'd love to have you as part of our family. We'll be back then next week, same day, same channel, 11 a.m. PT and 2 p.m. ET. And we'll bring a couple other guys from the Swan Squad, Swan Private Wealth team, to the show as well. Steven will be back next week. So tune in, join us. We always love spending Friday afternoons